I wanted to show a slightly different type of trade this time, and it's Apple. And you'll know I'm a big fan of Apple, got a very long-term holding. We're normally looking for opportunities because I'm going to hold it until my grandchildren are born. So I'm normally looking for opportunities when it comes to Apple on doing shorts. But anyway, I just wanted to show you the longs for those who wanted to trade Apple. We had a good, nice pickup here, and then it gapped up. Now, the reason I wanted to show this is because sometimes people ask me, they say, wait a minute, how did you know to get in when there's going to be a massive gap up? So let's get things straight. We don't have some kind of witchcraft or crystal ball. What happens with our algorithm is it looks for certain patterns. It's not those patterns. That's too simple. That'll be like Japanese candlesticks. It looks for patterns going back about 20 odd periods. It looks for multiple indicators, not just these, multiple indicators across multiple time frames, being in synchronicity, as well as the pattern recognition and the price confirmation, which means the price making a 2-period high on top of it. Now, all of these things have to work. Some people think, oh, I just need to look at multiple indicators. Well, no, you need to look at multiple indicators in a way the textbooks don't. And my apprentices know what I'm talking about. If you're not an apprentice, go to pipspredator.com. And anyway, we found this. Now, the other thing is this. We don't know for sure the price is going to move up. All it means is that there is an increased probability that were there to be some particularly positive news, that the market is likely to rally. And there's an increased probability were there to be negative news, it won't fall too much. Okay. So we're placing, it's a bit like lighting a firework. If somebody goes next to it with a lighted match, there's an increased probability it's going to explode. Okay, so all we're saying is, there's a firework in place. If somebody comes along with a match, the market's going to explode. That's what we're looking for. This is Apple on the 15 minutes, by the way. And nice little trade. This was also increasingly an easy one to make, not least because the more of these arrows are pointing in the same direction as the signal, then greater the probability of the move. But not only that, we were trading in the direction of the trend as well. Now, you might say, well, why do you not only always do that? Why not always trade in the direction of the trend? And only when all the indicators are in the same direction as the original signal. Well, if we did that, we'd have probably too few trades. There's not really enough of sufficient strength. So that's why it is the way it is. Okay, when it comes to stop losses, which is this yellow line, and the red dotted line, which is when we're adding to our winners. So when the price gets there, we double down, and therefore we have double the size position going in. Again, all these things my apprentices on pipspredator.com know. One thing you need to know with the stop loss, the ideal stop loss, in my view, is not necessarily just a trailing stop loss which trails the market price, so that if should this fall down, it'll stop you out at a profit. The ideal one's probably a stepped one. And by that, what I mean is if the market goes from here up to here, this far, then this stop loss will stay like this until it's stepped to the predetermined level, which was if this price hits here, and then it'll move up. So this will go like that, and only then will the stop loss be moving at this level and then step up. So it'll step in certain fixed proportions. What are those fixed proportions? Well, you can check that your broker does offer stepped stop losses for a start, and the fixed proportions, there you go, there's one. Okay, so you might do all of that or half of that. You might say if it goes up half that amount, I want to move the step loss up. The benefit with that is there's more room for the market to maneuver. The downside is if the trade comes back down, you'll have suffered a bigger loss than if you had a dynamic trailing stop loss. Okay, I talk about stop losses elsewhere. All right, so just wanted to give you a nice little update, take the opportunity through Apple to give you that update as well.